Which is the best growth stock to buy? Skillz or C3.ai? Now, these are up and coming younger growth stocks with innovative technologies that have yet to prove themselves. They are losing a lot of money on the bottom line, and they are certainly very high risk and very high reward potential. So, this is not for the intolerant risk investor. This is for investors that are very risk tolerant. So I'm going to answer that question in this video, comparing these two stocks on 4 different metrics. So let's get into the details. Starting with revenue on a trailing 12-month basis, C3.ai showing a better trend, maintaining the elevated level of revenue at 266 million. Meanwhile, Skillz revenue over the trailing 12 month has turned an inflection point and is now declining, hitting 335 million. I suspect this will continue lower for several quarters more. The company was spending an incredible amount of money on sales and marketing to attract customers, to get customers to repeat engage with the mobile gaming app. And now it said it's actually going to finally reduce that spending on sales and marketing as it focuses on reducing its losses on the bottom line. So that's going to cause its revenue to decrease. Meanwhile, C3.ai has a new product that's launching, they said in the spring of 2023, that is infused with artificial intelligence that's going to help enterprises, and that's likely to be a catalyst to increase sales for C3.ai in the second, third, and fourth quarter, maybe more so in the third and fourth quarter. It's already testing this product with its two really important customers. Baker Hughes and Koch Industries are two of its most important customers, and it's already rolled out this technology with them, and it's going to roll it out more broadly, they said, in the spring of 2023. So that's going to be exciting. That's a catalyst for C3.ai, and that's actually what has infused the stock price. It's caught a bid recently because of course, the popularity of artificial intelligence and companies that are delivering products associated with artificial intelligence. The next thing I wanted to look at is the cash flow from operations to sales. I wanted to look at if the companies are improving, positive or negative, and the trend lines, and they're both headed in the wrong direction here. Skillz with negative 72.5% in cash flow from operations to sales. The company is just headed in the wrong direction, and it's spending. What troubles me more so about Skillz is that it kept spending so much on sales and marketing just to attract customers, and it has a business model where it outsources game development, and so it doesn't spend money on developing games. It outsources that to app developers, and so it hasn't even been spending this cash flow on building out proprietary games that could attract customers in the long run. Instead, it's been spending on advertising, on marketing, on social media advertising, on bonuses to attract customers that are all, temporary forms of attracting customers. Whereas if it developed a game that became a hit, that could attract customers for the longer term, and that game would be intellectual property that the company could own for the long run. I would have favored that kind of spending, especially as the company noticed that the spending on sales and marketing had become ineffective. Meanwhile, C3.ai is also significantly negative in terms of cash flow from operations to sales, but at least the company has spent a lot of money on developing this proprietary technology, especially the one that's about to come out in the spring of 2023 that's infused with artificial intelligence. That's something that is the company's own proprietary property that it can patent and it can own for the long run, that can generate revenue and profit from longer term, instead of just spending on sales and marketing that will bring customers in temporarily, and if you don't keep providing them with something to stick around for, they're going to just go to the next company that provides a better option. The next thing I wanted to look at is the operating margin for the trailing 12 months. Again, both of these companies in the negative and headed in the wrong direction. Skillz at negative 98%, C3.ai at negative 102%. But again, for the same reason I mentioned for the cash flow from operations, I would give the edge to C3.ai here because of what the company has been spending its money on. Not just the level of spending, but on the quality of that spending. It's going into something that could provide benefits for the longer term for several years, whereas what Skillz has been spending money on, the primary thing, sales and marketing, is just temporary, attracting customers that may just sign up for the bonus and then leave. So finally, I wanted to look at valuation, and looking at this, the C3.ai is selling at a forward price to sales ratio of 7.649, which is not cheap. That's an expensive valuation for a company that's losing so much money on the bottom line and so unprofitable with enthusiasm about a product that's about to come out that hasn't came out yet, right? So that's really risky. Skillz trading at a forward price to sales of 0.657 is more than 10 times less expensive than C3.ai. So I mentioned at the beginning of this video, these are very high risk, high reward potential companies. Although I would say Skillz, the risk for investing in Skillz is a lot higher than the risk in investing in C3.ai, because I'm not sure that Skillz business model is viable longer term. I don't know if they reduce that sales and marketing spending. I don't know if they're going to attract or keep customers. I've looked at their app and they don't really have any attractive games that makes me want to stick around on the platform, deposit money, and engage with that platform. I'm not so sure of that, right? Whereas with C3.ai, they provide enterprises with software that improves their profitability, improves their efficiency, improves their operations. That's something of value that customers will go to C3.ai for. In fact, it's got one customer that really likes C3.ai. Baker Hughes accounts for nearly 50% of C3.ai's revenue. So you know that it has at least one customer that finds C3.ai's products and services very valuable to its own business. So I feel that for that reason, if I had to pick between one of these two stocks, I would pick. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would pick C3.ai as the better stock to buy. All right, so that's all I've got for this video. As always, I truly appreciate your viewership. I've hand selected some videos that are popping up on your screen right now that I think you're going to enjoy. So please click on one of those and I'll see you over there. Thank you for watching.